Are you guys familiar with gamma scalping? Just get a Y in the chat or an N. Until now, it's a great way to manage your trades. Spotting unusual option activity and recognizing synthetics, I learned so much more in just 3 months. JR created a wonderful community, keeping high spirits. Folks are so supportive and generous. Last but not least, with my small capital, I've been able to participate in all recommendations and some other experienced traders and already returned my investment on my subscription. Livy, this is beautiful. Thank you so much for sharing as well. So a couple of things I really love about this. For one, hey, Christine. Yeah, so we'll talk about that as well, because let me explain what gamma scalping is first, and then I'll get into the questions. Artie's got a question too. When do you exit the trade when it's going against you? When it's going against you, we want to wrestle with the trade. We don't want to exit with the trade and stop ourselves out. We want to find ways that we can break even on shitty trades. So it's a little bit different than I know many of you are used to, but let's get an example from Livy's comment. And again, you can use any stock here. I'm using QUBT. And here's the position. Let's say, hypothetically, we bought 10 of the 15 strike calls. Okay? If we did it all the way back here, when the stock's trading at 5, well, the 15 calls are right here. If you buy 10 of the 15 strike calls, when the stock's at 5 or when it's at 7, all you're doing is you're buying your long 1,000 shares from 15. That's it. That's your position. Now, if the stock is here or here or here or here, closes and expires down here, well, this would become worthless because you're long from 15. But you have the option to be long from 15. You don't have to be long from 15, but watch what happens. And this is called gamma scalping. Because when QUBT rallies, you're long 10 of the 15th strike. You could sell 1,000 shares if you want. Sell 1,000 shares at 25 when it gets all the way up there. What does that look like? Can you do that? Many people don't realize you can do this. And again, I'm doing this example just in a quantum stock. It works in any stock. If you're long, so your position is long 10, 15. Well, if it rallies up to 25 and you sell 1,000 shares, if you're long the 15 calls and you sell 1,000 shares at 25, what's your risk? What is, you bought 10 calls at the 15 strike, you sold 1,000 shares at 25. What's your risk? What do you guys think? What's your risk? Boom, boom, boom. Freaking love you guys. Your risk is $0. $0. Because what did you do? You just made $10 1,000 times. You just make 10K. If the stock falls off and gets absolutely crushed down to 5, wow, what would happen then? Well, we're long 10 calls from 15. We're short 1,000 shares from 25. Let's buy those shares back. Buy 1,000 shares. 5. Now we're up 20K. And you never, ever, ever touched your calls. This is why we say, and I understand if this is overwhelming or might be confusing to somebody. This takes a few days to learn. A few days in the course of your life that you're managing your own money to realize what options can do for you. You're putting yourself at such a huge disadvantage by not understanding what options can do. And by the way, I'm sharing all these different people who have feedback. They didn't have much options experience before this. Many people came and didn't have any options experience whatsoever. So here's James S. There are many things that I've learned. One is how to view unusual option activity. This could be a fake towards the other side of the trade. This is really interesting. You need to look deeper at the unusual option activity. So we use unusual option activity because I'm a big believer that if a stock's at 10 and somebody buys $1 billion worth of call options at 15, I'm humble enough to say that that person probably knows more than I do. That's why we follow unusual option activity. But institutions and endowments, they know that we follow unusual option activity, so they're often trying to trick us. And so this happened with a trade in MP, because we had a trade in MP where we had unusual option activity. There was quite a bit of open interest. And so I shared a trade in our advanced notice community. Now, these were calls that were bought. But after seeing the trade, I think they bought the calls that were bought were actually bearish. So that's why I shared a bearish trade in MP. Okay. Pros are buying the 26 calls. Maybe they're buying it as upside insurance, but I think it's a bet on the stock going down. So how do we do that? In the advanced notice community, I just put in the trade. We want to buy for $1.90, betting on the stock going down. Very next day, this one happened quick. The original trade, guys, buy the puts for $1.85. Guys, get out of those puts that we bought yesterday. We bought them for $1.85. Let's get out at $3.60, because that unusual option activity certainly pushed the stock down. Oh, I thought I had a chart on that one, but I guess not. I'm just going through the questions. Cost to get into the trade. If the price falls below strike price on expiration, the premium... No. So in that example from earlier, if the price falls from 25 to 5 and you're short stock, you could just buy your stock back. You never touched your options, okay? All right, let me keep pushing through, guys, these examples. Jonathan's deep knowledge of option trading, and not only his willingness to share that knowledge, but being available to us on a daily basis is invaluable. Thank you, Mark. Listing all the things that I've learned from him in the past year would be too long to post. But Jonathan's mantra of don't trade alone has been great. Having the community where we learn from others and don't have to trade alone is probably MIT's greatest value. That's something that you guys in the challenge, more poking your head in there to ask questions. But this is real telling, because every single day, like if we look at the advanced notice community, everyone's in there. Right now, we're talking about our QuickSo trade, QXO. QXO sold my 20 calls. Aaron talking about his QXO. So a lot of what we're doing is not only am I talking about the portfolio that I'm trading, but other people are sharing their position throughout the day, just asking for advice. I can't give advice in the community, but others can certainly give whatever kind of advice or communication they want to. And here's quick. This is a crazy trade. For those who are not familiar with this trade, this was a trade that we shared. I'll show you this. This is the reason why we shared this trade, QXO, the QXO trade story. So finding trades, guys, I'm showing you this because technical analysis alone is not enough. Okay, this is what you're competing against. A whole story of why we want to be in the QXO trade. The biggest part of it is that Kushner Affinity Partners is a major backer of QXO. When I put this out, public companies acquisition targets for QXO, today, Home Depot and QXO are fighting over a company called GMS. And again, I shared this document May 2nd, maybe? And we have QXO, which has been a dream, an absolute dream. This was like pre-SPAC. But this is what QXO has been doing since we shared this trade at 14 or 15. But interesting enough, one of the companies that we said that we're going to buy, GMS, is up 25% today. And again, fighting between Home Depot and QXO to buy GMS. Really awesome trade. Probably the best trade that we've had all year. At 16 per share, QXO, rare chance to invest early. This is just absolutely beautiful trade. And we got in there because of that advanced notice, unusual option activity. Well, I just took Mark. I just want to show you how Mark has been communicating in the room. Talking with Eddie, great stuff. Hector, thank buddy. Talking about the past YouTube videos. Plug, it's hard to explain all the benefits of the program. First and foremost, I'm going to say this over and over again. I can't say it enough. You're not going to figure this out on your own. Just like your business, guys, whether you're still working or whether you're retired, nobody is going to figure out your business on their own. They need to learn your business from somebody. Okay. I can confidently say that without knowing what you do, but nobody is going to figure it out. It takes time. It takes education. So yeah, learning what you don't know. Second and foremost, the Discord community is awesome. Everyone in it's helpful, thoughtful, sharing, teaching, and learning. A global group of friends all in together. Third and foremost, keep getting better. I can go on. It doesn't take long to learn that JR is truly in it for us. So thank you for saying that. QUIXO. Oh, I put QUIXO here because I wanted to throw a lesson at you. Here's a cool lesson that you can use forever. Delta. Delta is the price, the option for a $1 move in the stock. It's how much the option will move. But here's a cheat sheet. Here's the easiest way to think about Delta. Right now, when I took a snapshot of this, QXO was trading $23.81. These options have 56 days to go until expiration. The market is pricing in a 36% probability that QXO trades above 27 by expiration. The market is pricing in a 100% probability that QXO will trade over 14 by expiration. You can use Delta as a cheat sheet for the probability of a stock being in the money or out of the money. Does that make sense? Does that make sense? 100%, right? Okay, so it's really cool. So watch, you can build on that with skew. Looky here. Last trade, 24, right? 23.80. If I go $4 higher, there's a 30% probability of QXO being in the money at expiration, 56 days from now. That's what the market is pricing in. That's fact, guys. I'm not telling you something. That's fact. 31% you can find through the Delta. If we go forward the 20 strike, there's only a 20% probability of QXO trading under 20 by expiration. The market is pricing QXO to trade higher. Guys, the market is skewed to the upside because the option traders are betting for QXO to trade higher. And you can see that in the skew. It's tipping its hand. That's right. That's exactly right. And you learn that, again, it's fact. It's not feel at all. It's what's being priced in the market. Greg, hard to choose just one, Jonathan, but I have to go with your earnings advantage strategy. Greg didn't answer the question necessarily. He gave his favorite program. The thing about our earnings trades, guys, it's rinse and repeat. When earnings comes around, we trade the exact same way. And I thought it would be fun to share every single trade that we've shared in 2025 in our earnings trade. Every single trade, pretty freaking good. And I think you'll see there's 3 losers while the rest have absolutely crushed. So Greg, I can see why earnings is your favorite program. Days held, 30 days or so. Really, really just great trade, great trade, great trade. So more QXO, this is from Denny. Just want to share this because this is the best trade he ever had. He makes $19,000 in 30 days. So Denny, that is just awesome.